Namaskar guys, this is Stock Yatra and we are looking at the series of lectures on the basics of the Indian stock market. We had finished the why of the stock market earlier. We'll look at what is the stock market in this video. Stay tuned for the next series of videos where we'll be discussing how the stock market works, what are the intermediaries and the different other modules that we set in the objectives. Please do like, share and subscribe to Stock Yatra and hit the bell icon to stay tuned for our next upcoming videos. With this, we'll start our today's module, which is what is the stock market. We'll look at what is the stock market. So we can actually equate the entire working of the stock market to a normal market that deals in fruits and vegetables. Let us take a fruit market. In the fruit market, we'll understand how a fruit market works. So we have a area of land where different shops are available, and each of these shops have sellers or vendors who sell their product to buyers or customers. So this product is a fruit in case of a fruit market. Just equate the same thing with the stock market. This area of land is the stock market. Each of the shops are the stock exchanges. Stock exchanges. And the sellers or the vendors are basically sellers. The product here dealt here are shares and the buyers are buyers. Right? We'll look at what are stock exchanges in the next section. But here we'll look at how the stock market works. As we discussed above, the stock market is the marketplace where different sellers of different products come together to meet their buyers and make transactions with them. As we can see here, the stock market refers to the marketplace where shares are transacted. It also includes the primary market, but in layman's terms, the stock market is usually referring to the secondary market. The primary market is usually referred to as a separate market, but it is not exactly so. Now, shares are the products of the stock market. We'll look at what are shares and how they are formed. For example, for easy understanding, we'll take our company, Stock Yatra. Let us say we are into the textile industry. We deal with the textile industry, and I am one of the promoter or the owner or founder of Stock Yatra, which is the company. I put in a capital of 10 lakh rupees. So this is the capital that I put in, and I have 100% ownership of my company. Right? Now, let us say 6 months down the line, my company Stock Yatra is doing quite good and I am looking to expand my business. So I need to have in more capital, but I don't have that much money in my savings. So where do I get this capital from? I can borrow it from a bank or any other institution as a loan, but I'll have to pay interest, which I am not interested in. I can go for venture capitalists, just like you see in Shark Tank, but I don't want to do that either. I want a huge capital or a huge investment to pour in. So what I do is I go approach the public. It is a sort of a crowdfunding, but in an open aspect. So I approach the public and ask them for an investment in my company. But the public, just like us, are looking at profits for their capital or investment. Now, where do they get this returns or the profits? So they will be investing in our company in exchange for ownership in our company. So they are entitled to any profits that our company makes, right? But for the public to establish ownership in our company, we need to provide them ownership, provide a share of ownership. This share is our shares or the stocks. The shares are also called stocks. All right. These shares are given to the public in exchange for investment, and they have a part of ownership in our company. The part of ownership depends on the number of shares they buy or they invest in. Usually the numbers are very huge, in lakhs and crores, the number of shares that are put into the public, and the mode that we put it in is called an IPO or initial public offering, which we'll be talking about when dealing with the primary market. Through an IPO, I sell my shares for the first time to the public in return for an investment. We will discuss what is face value right here. So face value is I had put in 10 lakh and I was owning 100% of my ownership in my company. Now I want to sell a part of my ownership to the public in return for an investment. I want to raise a capital of say 50 lakh from the public, and I am willing to sell 20% of my ownership to the public. Now what I do is I split this 100% ownership into a number of shares. This number of shares can be determined by the promoters. Let us say I want to split this 10 lakh into, or the 100% ownership into 1 lakh shares, into 1 lakh number of shares. Now, when you do the math, the value of each of this 1 lakh share is going to return to 10 rupees. This is what we call the face value of the share, the initial value of my capital when split into shares. Of this, like I told you, I am going to distribute 20% to the public, which sums up to 20k shares. But I want to raise a capital of 50 lakh rupees. Now this 50 lakh rupees with just 20,000 shares, I won't be able to sell it at 10 rupees to get this much amount. So what I do is I sell this at a premium price. The actual face value of the share was 10 rupees, but I won't be selling it at 10 rupees to the company. I need new investment. I don't want to just circulate the old investment. So for new investment, I will be selling it at a premium price. Now this premium price will work somewhere around 250 rupees per share. So 20,000 when multiplied by 250 rupees per share, we get an investment of 50 lakh rupees. I hope you're understanding and you're able to follow the math. Now this 250 rupees is our IPO price. After this, the share price will be listed in the share market and normal trades will take place. This is how a share comes into the public market for the first time and is traded subsequently. And this is the reason we also look the reason behind the issue of shares. Initially, when I had 100% ownership in my company, Stock Yatra was a private company. But after I sold 20% shares to the public, my company Stock Yatra turned into a public sector undertaking or a public limited company. Right? So public companies are the companies whose shares are traded with the public. We looked at what are shares. Now shares are proof of ownership in a company. Proof of ownership in a company. Initially, in olden days, these shares were certificates, hard copies, paper format. They were certificates, just like we'll see further. But now we are having a digital format, which we'll be discussing later. Just keep in mind that we have a digital format right now and the share certificates are outdated. With this said, we'll look at what is a promoter. We saw what is a promoter. I was the promoter of my company. So it is basically the owner or the founder of a company. And the shareholders are everybody who own shares of a company. So it is majorly the public and anybody else who owns the shares. They are called shareholders. The stock market can be equated to a marketplace where goods are bought and sold. Actually, like I told you, it is an area of land where there are different shops, right? The total area of land is the stock market. But what are each of these shops? They actually deal in different goods. One deal with shares, the other might deal with derivatives, and so on. The proper classification has been shown here. So the financial instrument market has been divided into capital market and money market. The capital market is indirectly divided into the debt market and the equity market. This is where the mutual funds act, the debt market and the equity market. The debt market has primary market, secondary market and derivatives market. The money market consists of the treasury bills, call money market, commercial bills and certificates of deposits. With this, we complete the second chapter, which was the what is stock market. We looked at with this we complete the second module, where we discussed what is the stock market. The next module will be the working and the mechanism of the stock market. So stay tuned and watch out for our next video. Thank you for now. Jai Hind.